Good morning, everybody. Hey, welcome to this Monday as we head into the almost the last week of May, coming into Memorial Day weekend. I hope your weekend was good. We'll get Dave up here in just a second. Before we do that, though, let's not forget that in the world we live in, there are so many things that are out of our control. However, you can take control of your investment portfolio by knowing the amount of risk you have in that portfolio versus the amount of risk you should have in that portfolio. Give me a call, 863-382-0037 to schedule your core retirement analysis. And with that, we got Dave coming up next.
Good morning. It's 8:42 here, 18 before 9. That's the time of the day we always check in on your money and see what Wall Street's doing to you or for you today. Early returns look like they're doing something for you for the short term. Let's check in and see if it's holding up. Phillip Statler from Statler Financial Services in downtown Sebring is on the telephone. Phillip, I hope you had a good weekend.
Hey, I did, Dave. It is, and it's hard to believe that Memorial Day weekend's coming up this next weekend. It's just crazy how fast it's flying by.
Absolutely. I kind of went into shock this morning, looked at the calendar when I opened up the show this morning and said, oh, holy crud, it's a 4-day work week for a lot of folks next week. Memorial Day is next Monday, so this is our last 5-day work week of the spring season, and it's just going too fast. And it looks like May is not going to be a sell in May and go away month based upon Friday. There were a few party favors that went off, I suspect, in a few brokerage houses. Dow passed 40,000 on Friday, not by much, but we ended at 40,003.59, up 134 points on Friday. NASDAQ went up by 6, and kind of continuing a trend, a flight to quality trend, for lack of a better term. NASDAQ was off by about 12, but that was only 0.07% on balance. It was a pretty darn good day on Wall Street, wasn't it?
Yeah, it was. And I would say we finished the week off in pretty good shape. So that continues to see, but, we continue to see, interest rates dragging down as if, we saw over the weekend that Red Lobster filed for bankruptcy. And so, that's a kind of a staple in the United States. Red Lobster was, I don't know, one of the first seafood restaurants I ever remember going to, as a kid. And so it's sad when you see something like that happen to an old inline company like that.
Absolutely. It is Chapter 7, and at the very least, at the end of the week before their filing, their store closing announcements did not include Sebring. Did you hear any update on that? They aren't closing everything, are they?
I did not. I've not heard anything other than what the list was that they put out last week.
Yeah, and I double-checked that. Sebring was not included in it, although three, I think, up in Orlando are all on the closing list, which kind of emphasizes the notion that as a specialty restaurant, Red Lobster may be morphing into a smaller town proposition. The big city ones aren't doing as well, where there are a lot of alternatives. But here in town, evidently, our store is holding up all right. Inflation last week, the biggest reason for the euphoria we got on Wall Street is a somewhat modest CPI reading earlier in the week gave everybody a possibility in the rumors that, holy crud, the Fed might drop interest rates, which you and I kind of giggle at and say, what are you smoking?
Yeah, exactly. Just don't see that happen.
That's all going to come to a close Tuesday afternoon at 2 when the Open Market Committee meeting minutes from last month get released. And I'm just reading between the lines. I've got Bostic saying higher for longer. I got the Minneapolis Fed president saying maybe even an increase, and everybody's basically trying to diminish expectations. I mean, these were people that were in the meeting. They're probably doing it for a reason. I suspect the minutes on Wednesday afternoon are not going to be a positive impact on the market, given the dreamland investors are in. Would you agree?
I agree. I mean, I just think that it's not going to be rosy that everybody's looking for, and so I think that's going to be an issue. It's going to be interesting to see what it says and whether or not it's impactful on the markets. We're getting really frothy in the indexes as a whole, and so with the interest rates staying high for so long, we are seeing it take an impact to the consumer, and that's just going to get worse the longer it hangs up there.
Yep, the combination of interest rates and the increase in wages, which is a good thing on its face for the people who are getting the increases. Found a tidbit. Bank of America economists put out a little report digging a little deeper on the consumer price index numbers that we got. First of all, you look at the notion of the CPI actually looked considerably better than we expected. Yada yada yada. Well, that was core goods, food, and energy price growth. Those have actually declined, and occasionally they've actually gone down. But when you dig a little deeper into the CPI number, services, which include housing costs, other categories like medical care, the inflation rate in services is still pretty solidly over 3%, and that's a crack in the armor that the Fed governors were looking at. And word out of some of the corners I'm reading is there might actually, when we read the minutes on Wednesday, include some discussion as to whether or not we need a rate increase in interest rates. And if the word even comes out in those minutes, I'm just expecting a seismograph about 2 p.m. on Wednesday afternoon.
I think it's definitely a possibility, Dave, because we continue to see, wage inflation is driving inflation right now. As you just said, that's what the CPI really is showing us. And so we continue to battle that wage inflation. And if folks' wages were going up and prices and services were staying where they were, hey, that'd be a great gain for those folks. But when services and McDonald's hamburgers and those things all continue to go up, up, and up, well, how much of that wage increase are they really getting to keep in their pocket?
And that's the issue down the line. And when we just had, wages go up, prices go up to track them, whatnot down the line. Yeah, we're making more this year than, on balance anyway, in the economy. This year we're making more than we were a year or two ago, but the prices from 3 years ago are 20% higher, and wage growth hasn't exactly caught up with that. Basically a skid to a halt for a little while in order to get inflation under control. On a macro base, it'd be a good thing, and I'm not cheering against your boss giving you a raise, people, but somewhere down the line, the macro numbers got to kind of skid to a halt to catch up with each other.
Well, that's right. And we'll see if interest rates, by chance, do tick up again this year. That's just going to put more pressure on the consumer.
Yeah, I'm still of a mindset because I believe in the world of realpolitik. I don't think there is a Federal Reserve chairman on the face of the earth that has ever wanted to be responsible for throwing an administration out of office, like the administration or not. I wouldn't be surprised if an increase came, but it would be after the election. That would just be my guess based on realpolitik, if nothing more. But a rate decrease, that chance is starting to look more like slim to none to me than anything else, isn't it, you?
Yeah, it does to me too, and I think none's getting close to the door.
Tend to agree. Yeah, now we're starting to hear the economists, and like I said, the Fed members. It was Michelle Bowman from the Minneapolis Fed said she wouldn't rule out a rate hike, and that just kind of you can almost tell when somebody does a rubber chicken speech, because that's when the indexes go poof if they say something you don't like, and we had that happen on Friday. So. But still, everything's coming up roses for the short term, and no matter what happens with the Fed minutes on Wednesday, everybody's excited because after the market closes on Wednesday, the last of the big glamour tech stocks comes out, and everybody's expecting NVIDIA to kick booty and take the expectations and throw them out the window and just completely cream everything. Boy, if NVIDIA has an off quarter following up on that Fed report, I don't want to wake up on Thursday morning.
Yeah, it will definitely not be good if they miss, or even I believe even if they come close. If they don't blow it out, it's going to be interesting because Barclays, Stifel, a lot of brokerage firms have actually lifted their price targets on NVIDIA, and so that's got them going up this morning another 1.3%. So they're right there, $937 a share, and they made a really big comeback because they'd taken it on the chin a week or two ago, and were I think it had gotten down in the mid to low 800s. So it's really bounced back the last couple of weeks.
And yeah, like I've been saying all along, it's a heck of a tough room this year as far as earnings season, just beating estimates and even having, we're going to make our numbers for the rest of the year. That's not good enough. You got to raise them if you want to be able to see your stock price grow this earnings season. I mean, they're really playing to a tough room this year in the investment community.
That's true. That's so true. I did also see, Dave, that Apple is actually starting to implement some aggressive discounts. Unfortunately, not here in the United States, but in China.
Cool.
Yeah, no, in China, they're putting in some aggressive discounts. So that's pushing Apple down about 0.25%. They were down about 1% earlier this morning.
I know last week they had a little bit of an uptick primarily because they said, hey, our new operating system is going to have AI in it. We're going to have enhanced artificial intelligence on your iPhone starting with the 16. Does that thrill you as much as it doesn't me?
Yeah, exactly. Exactly.
But it is a trend. I found a chart, mentioning artificial intelligence, and this impacts a little on NVIDIA because they've gotten fat off of artificial intelligence. Every sector in the market is talking more about artificial intelligence than they did last year. You get down to the infotech industry, okay, fine. 87% of them are talking about artificial intelligence. Communication services, last year 52.6% of them mentioned it. This year 72.2%. Financials, do you really want artificial intelligence at your bank? Financials last year, 30% of them said we were exploring it. This year, 36%. Then you get down into things like healthcare and materials businesses. 8% last year said they were using artificial intelligence in their business. This year, 16% are. If I'm a chip maker like NVIDIA making AI products, I'm kind of thinking, well, I probably better plan on really kicking butt because everybody's mentioning our name in essence.
That's right. Hey, on the other side of the coin, I think we need to talk about this a little bit, Dave. I was reading an article, and it's another place where Powell has come out and said, look, we've got a problem. And that problem is that our debt has increased almost 50% from March of 2020. Folks, that means that we had a debt of $23 trillion back in March of 2020. Today, that number is $34.5 trillion in debt. And on top of that, we've seen our interest rates increase by over 400%. That is not a good thing. And so, we've got some headwinds coming as we continue to try to work on that. They say that within the next 5 to 10 years, that debt to GDP is going to be 120%, which we've never had it that high before.
And they used to say, well, it's nowhere near where the GDP is. It's only half the GDP. We don't need to worry about it. No, it's how much more than the GDP is it? It's the kind of a red flag that you and I were waving while the interest rates were going up last year. Every time the federal bonds roll over, and they're 20, 30-year bonds, but there are the 3-month and the 6-month bonds too. Every time those darn things roll over, as the interest rates go up, the cost to the federal government goes up because when they roll over at the increased interest rate, which means our debt service is going through the roof, even if we didn't borrow another $1 trillion or so this year. And does anybody believe we're not going to?
Yeah, and think about this, Dave. A 20-year bond, we don't have an option to refinance it. We've locked in that rate. There's no callability or no refinancing that debt when interest rates start to come back down. So it's interesting to me if maybe we don't, instead of rolling 20s, maybe we need to be rolling those to ones and seeing what happens in the next 12 to 24 months.
I mean, mortgage buyers have figured it out with 1-year ARMs betting on the market going down by a little bit in at least one of the next 2 years. Maybe the government ought to take the same
approach, right? Yeah, exactly.
Resetting the table, Friday was not a bad day on the blue chips. It was actually very good. The more adventurous stocks were flat to slightly off. 45 minutes before we opened this morning, are we going to stay above 40 on the Dow, Phillip?
Right now on the futures, the futures are trading right in that a little over 40,000. They're up a 1/100th of a percent. The S&P 500 is up less than $4, and the NASDAQ 100 is up less than $20. So no huge movement across the board on the index side. On the commodity side, silver still just going crazy, Dave. Up another 1/3% today to $31.36 an ounce. Almost back to that 32 I remember way back when. Gold is flat this morning right now, and crude oil is down 0.5% to $79.19 a barrel right now.
No, yeah, it's still up from last week where we saw it. I don't like it. Overseas markets, the Asian Rim looked at our closings on Friday and said, hey, cool beans. Everything was pretty much evenly up in about the 0.5% range. Europe is saying, okay, they're hanging on to it okay so far this morning off our futures. European markets are up 0.15% halfway through their trading day. Keeping tabs on my retirement is always a project. It's much easier, though, when I got a guidepost to be able to make it happen. How do I find you to get those guideposts for my retirement, Phillip?
That's why I created the Core Retirement Design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again tomorrow morning to see if the Dow stays above 40, as important as that is. I'll see you then, Phillip. Be well, all right?
All right, have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
And folks, again, I want to thank you for joining us today. Same time, same place. I hope I see you back here then. Take care. Bye now.